Hey friends, thanks so much for tuning in. I'm back on the line, Andy Hoffman from Miles Franklin with essentially a breaking news update. Very powerful, dynamic information being released today through the GDP report. We are documenting the collapse, and nobody better to help us do that than Andy Hoffman. Andy, how are you?
Oh, good. I'm just on fire today between the GDP report and the Fed meeting and the Chinese QE the other day or announcement. I'm just on fire. So
Yeah, it's unbelievable, and we are documenting the collapse. Here's the headline from Zero Hedge. The biggest inventory build in history prevents total collapse of the U.S. economy. Andy, can you just briefly break it down for us? Because this is the collapse.
yes, and again, remember last year we had a negative GDP print in the first quarter, which they blamed on the weather, which is an absolutely incredibly ridiculous thing, given that that's what seasonal adjustments are for. I mean, we know that this is how all economic data is prevented from being negative as seasonal adjustments. Well, here we are a year later with the experience of the so-called terrible winter, which I proved last year wasn't true. It wasn't that there were big flight cancellations last year. There's just less flights over the years because business is so bad. But here we are a year later. You'd think that if they had seasonal adjustments that were wrong, that they'd have figured it out. The winter this year, by the way, was far warmer than last year. Okay, and part of this first quarter is March, which is when spring starts. So they claimed that the weather was bad. And yet, across the board, the data that has nothing to do with the weather, like capital spending, fixed capital spending, which has nothing to do with retail sales, plunged as well. Meanwhile, the number that came out, which you're referring to, was 0.2% was the first quarter GDP number. Now, why the street, Wall Street, was expecting 1.0% is beyond me, because the Fed's own tracking number has been saying all along we're at 0.1%, and it came in at 0.2. But the scary part about it was the GDP deflator that they used. It was expected to be positive 0.5. It was negative. So they actually claim that the average person's cost of living declined in the first quarter, meaning the GDP number would have been much lower if they actually used a realistic number. And then what you are referring to is, now again, when you're talking about GDP, again, the way between the way they cook the books and the way they calculate it in the first place is ridiculous. But they will calculate if a business manufactures a product. Let's say the Gap makes some clothes. Okay, they didn't sell them; they just made them. That counts as GDP. Of course, when they sell them, that's not, the GDP's already been put on the books. So all the GDP growth came from just making the stuff. And in the first quarter, we found out that the GDP number was goosed by 3 full percentage points by, as you say, the biggest inventory build in a quarter in U.S. history, meaning manufacturing businesses across the board were just making stuff, making stuff, making stuff. And since we know that fixed capital spending went down, it was all retail, like whether it's Apple or it's the Gap or whatever, just making stuff to sell, which didn't yet sell. So in other words, we're going to have a huge drag on GDP throughout the year right now. And given that the economy is falling apart, we're also going to see a huge decline in earnings as they try to sell this stuff at falling prices. And this is before we already have expectations for the S&P 500 revenues and earnings to decline in 2015. That was before we even found out about this inventory bill.
Yeah, it's just a stunning report. I just want to read this line. If U.S. inventories, already at record high levels, had not grown by $121.9 billion and merely remained flat, U.S. Q1 GDP would not be 0.2%, but would be negative 2.6%. That isn't recession, that's depression. And to quantify what you're talking about, Andy, take a look at Caterpillar. You've written about Caterpillar. Caterpillar has had absolutely deplorable quarters, quarter over quarter, going on for months now.
Caterpillar had 18 months in a row of year-over-year sales declines. 18 months in a row during the 2008-2009 recession. Now I think they're up to almost 30 months in a row. And even Jim Cramer says, I don't even need to look at any other company. Caterpillar is the global outlook, okay, for mining, manufacturing, anything that's actual real. And I'm not talking about social media. We won't even talk about Twitter and how that bubble broke last night, and probably the whole bubble on social media is going to break as a result. But again, across the board, We're talking about weak data, weak sales, weak in Japan, weak in China, weak in Europe, weak everywhere. And this was, we talked about minus 2.6% if we didn't have the inventory build. And again, we also were using a negative GDP deflator. This is the government telling us our cost of living went down in the first quarter just because the oil price went down a little. Absolutely ridiculous. And by the way, that number, if they're going to be true to their own methods, will have to go up now that the oil price has gone up, which will bring GDP down further in the coming quarters. So again, we're in a recovery. We're only a couple hours now from the Fed meeting. We're in a supposed recovery in which GDP is borderline negative, and it's already pretty much guaranteed that it will be lower. The growth will be lower this year than it was last year. And yet they're trying to tell us we're in a recovery and that maybe they'll raise rates sometime in the future. No, uber dovishness across the board. The Fed is going to continue with that policy. And at some point soon, whether it's because the Chinese force their hand with their crazy QE policies or simply because they lose control of markets or the economy implodes, that Yellen reversal in QE4 is on the horizon. I see the light at the end of the tunnel. And when it comes, the end of the gold bear market we've seen overseas distinctly will be over here too. And if you don't have it already, let alone at prices below the cost of production, you are going to be kicking yourself, not because of the profits you have lost, but your ability to protect yourself from the hell that is coming.
Well, and what a perfect segue to precious metals, specifically JP Morgan's physical silver hoard, according to the work of Ted Butler, could be anywhere from 55 million ounces to over 300 million physical ounces. But first, I want to take a walk down memory lane, Andy, if I could. Let me read this from Bloomberg's Nicholas Larkin. It's an article he wrote back in June of 2014, and it was titled, New Silver Benchmark Seen Heralding Gold Fix Revamp. Here's the first paragraph, Andy. He says, proposals to replace the 117-year-old system of fixing prices for the $5 trillion silver market are poised to add more transparency for the London benchmark used in the $18 trillion gold industry as well. That was the very first paragraph in his article, Andy, and a couple things there. The 117-year-old system of fixing prices, at admission there by Bloomberg, and what really puzzled me at the time and still does, Andy, how is it possible for Nicholas Larkin to say the silver market is a $5 trillion annual market?
Well, actually, I'd say it's an admission that Bloomberg are just morons, which is what I've been saying all along. They've, in fact, I wrote this weekend about how there's been a complete and utter neglect of all financial journalism. It's almost like if you actually try to have some some journalism incentive, you're deemed unpatriotic or a terrorist. And that includes the Wall Street Journal, the New York Times, of course, the CNBCs of the world, and even the Bloombergs and Reuters, which once stood for our quality journals. I mean, they're idiots. $5 trillion. As you said, this 700 million ounces produced in a year, and most of what has been produced is gone. So maybe it's a $5 trillion worth of paper being traded that doesn't exist, but certainly there's not $5 trillion worth of silver that has ever existed or even close to the amount. But, when people say stuff like, oh, they're going to end the fix and, and this and that. I mean, who trusts what any of these guys are doing anyway? And whatever they say they're doing 10 times more below the surface. And of course, the whole concept that there's been, admissions like Deutsche Bank was kicked off the gold fix and there's admissions of manipulation by UBS on the fix. But the actual physical fix is just something that happens like twice a day where some transactions are traded. The problem is that gold and silver are suppressed all day long. From the beginning of trading on Sunday night, we've now had 95 of the past 97 Sunday nights, what I call Sunday night sentiment, to 2:15 a.m., the opening of the London paper pre-market session, where I think I'm up to 425 of the past 450 trading days where gold's been attacked at that time. And then, of course, the COMEX open. And then, of course, the one relation to the fix is 10 a.m. Eastern Standard Time, which is the London PM fix, has been key attack time number one for the past 20 years. Because that's the end of physical trading, so it makes it easier for them. So I take with a grain of salt all the stuff they talk about changes being made. They will try to suppress gold and silver as long as they can until they're swamped by demand, which is inevitable.
Yeah, I agree with you. And really, the reason I wanted to read that was just to remind people that, even in Bloomberg's estimation here, he's saying that the annual gold industry, as he puts it, is 18 trillion, and he's putting the price at the silver market at 5 trillion. 5 times 3 is 15, Andy. I believe that silver should be priced probably about a third as much as gold. If gold's at 1,200, that would give us what, $400 silver? And maybe I'm getting a little ahead of myself, but let's just reframe this for folks. As you said in your most recent audio blog, quote, in 2011, the powers that be reached their cumulative point of no return, at which point they switched from an as-needed manipulation scheme to one of 24/7 operation, encompassing not only relentless manipulation of financial markets, but economic data and the financial media itself. Yeah, we can't trust a thing Bloomberg or CNBC or any of these mockingbirds say, and we certainly can't trust any of the data coming out of the government either.
Right, and that's the same thing you're going to talk about J.P. Morgan's supposed stash. I mean, Ted Butler, a great guy. He's done tireless yeoman's work, but he's using data that's fraudulent. And I mean, let's face it, the CME, which owns the COMEX, put a disclaimer a year ago on the data that says we cannot guarantee that this data is true. And since we know, given what we've seen in the data, that it makes no sense at all, and the fact that, let alone that these commercials have been short for 20 years, gold and silver, while they've been in a bull market, that they couldn't possibly be doing that and still be solvent unless they were funded by much bigger pockets. To say that JP Morgan, supposedly their vault is getting much bigger with much more silver, who believes a word that they say, JP Morgan? I mean, these are the bottom of the basement, partners of government criminals in everything that they say and do. And while it sounds good on paper that they are shorting paper and buying physical, and it would make sense that they would be doing that if there was sense in the world, this is all based on data that is absolutely positively no credibility whatsoever. And I mean zero. Just like their earnings reports, just like the statements that their executives make, just like the statements our government leaders make. Completely untrustworthy.
It does mention saying, Andy, that J.P. Morgan, according to Ted Butler, is long physical while short on the COMEX. It makes perfect sense. They can drive the paper price down through their paper manipulation schemes and hoard physical. I mean, they're not stupid at J.P. Morgan. They know silver's worth a heck of a lot more than 16 bucks an ounce, so it does make sense that they would want to hoard the physical, meanwhile knocking the paper price down, doesn't it?
Absolutely. I mean, there's no one on the planet that's more well aware of the dichotomy between the dwindling inventories and supplies and the soaring demand than they are. So obviously, they're smart enough to know this. That doesn't mean that they don't really care and simply are so fearful of the silver market and fearful of taking too much off the silver market. Because when they say, well, they're hoarding physical, there's not that much physical to start with. I mean, there's a huge demand around the world. In India and China, there's not much supply. Most of the supply is taken up by industry anyway. So it's not like they could be taking these monster amounts of silver off the market without people knowing it. I mean, that's why they've been naked shorting the Central Fund of Canada and the Sprott funds forever. They're scared of measly $300 million offerings because every time they would do one in the past, the prices would rocket up. So again, are they really doing this strategy en masse? I don't know. I know they're naked shorting the paper because, again, to them it doesn't matter. It's a lost leader. I mean, look, if the world collapses, JP Morgan is going to be in big trouble. I mean, if the system that they are a big part of, the fiat system, yeah, maybe they'll survive. Maybe they were smart enough to buy some gold and have some other businesses. But the fact is that they, like the U.S. government and the Fed, are tied to the fiat currency system. And everything about gold and silver is a lost leader to them. All they know is they want people not to own this stuff. They want the sentiment down. They want people to hate the miners. They want them to hate the gold and silver, the ETFs, everything. So probably they've been buying some. Maybe it's just the individual executives, the people who have the big money, the Jamie Dimons. But again, when I see these reports, COMEX data shows they're doing this, or JP Morgan says they're doing this, I do not believe anything. And it's not just an intuition. It's called, I've been doing research for years and years and years about price movements and data, and it doesn't make sense, anything that they say.
No, I understand that sentiment. And just to bolster what you're saying, The manipulation that we cite, and often we name Goldman Sachs, we name J.P. Morgan, we name the Fed. This manipulation goes back decades, and according to GATA's research, public documents have been unearthed from 1991, and former head of the IMF, Yeli Zylstra, recommended to central bankers then to regulate the gold price in the free market. What an ironic turn of phrase, regulate the gold price in the free market. These guys have been working to manipulate the prices of physical gold and, of course, silver for decades, Andy, and the reason is because their con game, the confidence game, is in the dollar. It must have confidence. People must have belief in the dollar. And once that belief is gone, their con game ends.
Absolutely. I mean, that's what a Ponzi scheme is. It must grow exponentially, and you must retain confidence in it. And hence the QE to infinity, and hence the draconian attempts to manipulate markets. And again, what you're talking about, I gave a full 5-minute dissertation on what the data, that kudos to Bill and Chris for coming up with those speeches this week. And essentially, we're talking about a guy who was the head of the Bank of International Settlements giving a speech saying, I tried to get us to do this in 1979, but no one listened. And now that we had this big gold surge in 1980, we need to do something about it. We need to manipulate the price. We could have prevented this, and we needed to not let it happen again.
Get some feedback there. Yeah, absolutely. You mentioned that and flushed it out very well in your April 23rd audio blog, a record 8 pages of horrible headlines. I do want to move on to some of those horrible headlines and talk about some geopolitics with you. But first, I want to quote Charles Mackay, who said, "Men, it will be seen, they go mad in herds, while they only recover their senses slowly, one by one." That quote is very apropos because take a look at what's going on with the Chinese indexes. We see grandmothers and shoeshine boys opening up brokerage accounts. We see the Hang Seng off the charts into bubble territory. Of course, the Dow propaganda average, as you like to say, is absolutely manipulated and off the charts. I think all of these stock markets, Andy, are part of this con game, are they not?
Well, yes. In fact, my article is called All Out Bubble Mania Without a Cushion, meaning the Fed, when there's the next crisis, the Fed and all these banks have nothing left. They're already at zero or less interest rates. They've all done their QE, and all they could do is create hyperinflation the next time around. And what we are seeing in China, I mean, remember, they have a $3+ trillion balance sheet, and they are going all at it. They saw what the Japanese have just done. The Japanese who are now, they doubled up on Abenomics, and now are overtly buying stocks. And by the way, Fitch downgraded Japan, so getting pretty close to junk status. This is right after all the effects of these bubbles. That's how little it's helped their economy. But in China, and again, part of the reason for the jump we've seen in gold today, I mean, we're taping on Monday, I think is because China has hinted that they are going to do QE. They said this morning, we're looking at buying the debt of local governments. I mean, this is the big one right here. This is the Chinese, the start of depegging the yuan, the start of hyperinflating the yuan. And again, I mean, we're talking about this record gold demand in China as we speak. Can you imagine if they go into overt QE, what it's going to do to gold demand in China? And again, this is in China where the Chinese government wants people to buy gold. So, we're talking about some major things going on right now. And again, it's not just, I mean, this thing with China starting QE and Japan going all in, and obviously the ECB. Remember, the Fed is meeting this week, and the Fed, as desperate as they want to do something about ending their easy monetary policy, they just can't. I mean, the economy is falling apart. The Boston Fed, I saw a paper that they put out today suggesting the Fed may have to do QE to infinity. That's the early warning shot right there. And heck, I saw one of the former Bank of Japan governors gave a speech this weekend where he said ending Abenomics, he said it's not only out of the question, but even considering an exit would be a nightmare. So we're getting to the point where the whole world is realizing that it's got to be QE to infinity everywhere. And the Chinese, what they are saying this morning is the all clear for the whole Eastern Hemisphere to do it. And it's only a matter of time before that Yellen reversal on this side of the pond.
Well, what would that mean to us in the dollar? What would that mean globally, Andy, if the Chinese are going to now engage in their own form of QE? Because as you've long noted, the Fed can't raise interest rates. They can't. They can't even raise a quarter point. I mean, if they did, it would cause a global inflationary apocalypse, in your words. So help us paint the picture. What does QE in China mean, and what would it mean globally?
Well, again, we have this final currency war right now. Now, China's got two problems. The one problem is that their economy is absolutely imploding from all the overinvestment in everything, from mining capacity to energy capacity to ghost cities. They put on 28 trillion of debt in the past 7 years since the crisis. So they have that problem. The other problem they have is that they're in a bad economy. They're losing market share dramatically to their neighbors, particularly Japan, because of Abenomics. Remember, the Chinese have pegged their currency to the dollar. So as the dollar goes up against the yen, so does the yuan. It's up 30% against the yuan now, against the yen. So they need to join the final currency war like everyone else has. The pressure on them politically to do so and to theoretically help create jobs, not that it's created any jobs in Japan, is going to be tremendous. And then on top of that, the Chinese are seeing all their historic real estate construction and credit bubble collapse, and that's why they know they need to do QE. They're talking about local governments, all these local governments. I mean, hundreds of them, thousands of them, that need to be bailed out. So we're talking about a massive inflationary wave that's going to hit that side of the world. It's going to try to counter the deflationary wave in their business, which won't get any better. And it's pretty scary. And of course, the United States is not going to stand for that either. I mean, the White House itself just put out a warning last month that said the strong dollar is posing headwinds to U.S. growth. And it sure is, if you've seen the earnings out there. So again, we're seeing it come from all angles right now. And it's only, I mean, look, on Wednesday, the Fed is giving their statement at 2 o'clock. At 8 in the morning is when the GDP comes out. And it's probably going to be close to zero. And people are worried about whether they're going to raise interest rates with the world's biggest debt edifice growing exponentially and the economy falling apart. No, assuming we don't have a big bang like China actually devaluing the yuan officially, I mean, that would supersede anything the Fed could possibly do, or a black swan event like a war, or something. It all comes down to when Janet Yellen is forced to say, you know what, this whole rate hike thing, it's just not in the cards. We got to think about more stimulus. And when that happens, that's QE to infinity for the entire world. And if you don't own your gold at that point, you're going to be looking down at prices that we're at from a very, very high level.
Yeah, we're living in a propaganda matrix, so I know that for people who are listening to this conversation, to whom this information is new, it might be a bitter pill to swallow because it feels like the status quo will go on forever. But as Andy has just clearly quantified and documented, it can't. The Fed can't raise rates because our debt is exponential, as Andy just said. We're approaching $19 trillion of publicly stated debt. The off-books debt is well north of $100 trillion. This paradigm cannot go on forever.
And by the way, if the Fed announced a quarter point rate increase, let alone, remember they've said, well, we're not going to raise rates, but if we were going to, first we would change the guidance to let you know we're thinking about it. And even if we do that, that doesn't necessarily mean we'll do it. So if they were actually going to raise rates, they would tell you way in advance that it's coming. And even so, with all that warning, if they were raising rates while China's doing QE and Europe is falling apart, the dollar would so rocket higher. You can't even imagine. The dollar index would be at 120 before you could blink. And everything that I just said would be 1,000 times worse. The pressure on the Chinese to devalue, the pressure on all these, the inflationary Armageddon that I said, because the entire world will see their currencies collapse. So again, it's all a tightrope act, and it's only a matter of time before the Fed has to join the party. I should say rejoin the party.
Yeah, but the Fed is running out of bullets here, Andy, and they've spent trillions. since 2008. And all that's happened is that there's been a transfer of wealth to the 1%, to the richest of the richest people on the planet. They're doing as well as they've done since 1929, before the last huge stock market crash. And they're just doing fine. And meanwhile, as you note, more than 1/3 of all employed workers in the United States have less than $1,000 in savings. There's more than 45 million people on food stamps. What cards does the Fed have left to play other than to pay banks to take money at this point?
Exactly. That just takes the stakes higher. That's why you're having these social revolutions all over the world. Greece is a perfect example of the same things going on. A lot of it's going on in Europe, in Spain, and Italy, and France. It's going to happen here too. I mean, and again, today what I wrote about, it'll be out in 2 days, is the war on cash. Forget the war on money, which is the war trying to keep the gold price down. All these draconian efforts to keep the price of cash down and keep it out of people's hands is preventing people from saving, so that disparity of wealth is just exploding. I mean, the 1% is becoming the 0.1%, and all that does is foster more revolution and anger, and and increase and foment more forces of change. I mean, this, again, like you said, people are tired of this status quo, but it's really only a status quo for a couple of years. It's a mad scientist experiment. It's given them a few years of bliss on the top end, but pretty soon it's going to be horror for everybody. And if you haven't prepared yourself by then, I don't know what you're going to do, because you're going to not be able to at some point.
Well, Andy, what would you like to end on here? We've got a couple minutes left, and I know Greece continues to be on the front burner for anybody paying attention to the global economic collapse, and the IMF and the central bankers and their machinations to enslave nations and peoples to unrepayable debt. You say 2015 Grexit is all but guaranteed. What's the latest on Greece?
That's worse than ever. I mean, they had conferences this weekend. They basically all yelled at each other and insulted each other. Now they're going to fire that finance minister, Varoufakis, as if that's going to change anything. No, I mean, Greece is broke. They're more broke than they've ever been. No one's giving them any money. Russia's not giving them any money. They are broke. They are going to leave, and if Alexis Tsipras doesn't do it, they're going to kick Alexis Tsipras out, and the next guy will do it. Maybe it's the Golden Dawn Nazis that'll do it. And the same thing's going to happen in Italy with Beppe Grillo's Five-Star Movement, which is now the most powerful party in Italy. The National Front in France with Marine Le Pen is going to take power in France in 2 years. And the Podemos party in Spain, which also wants to leave the euro, is going to take power in December during the elections. And that is if Catalonia, I should say, doesn't secede first. I mean, all this stuff is coming to a head. And the only reason that people believe that maybe it's not so bad is because they've completely taken over financial markets. They've smashed gold to oblivion. They've created these horrific bubbles in stocks and bonds, which have nowhere to go in real terms but down. I don't care if they hyperinflate or crash. People are going to lose tremendous amounts of money, of real money, over the years if they're buying up here in these crazy markets. So, we wait and see what is the catalyst, and we hold our physical gold and silver. And if we're blessed to have resources to add to positions below the cost of production with the world flaming out, then good for us. But for the rest of us, we just sit and wait.
Yeah, that's key. Adding physical below the cost of production. Nothing could make more sense, especially when we see markets gone mad worldwide. Andy, why don't you tell people how they can protect themselves if they want to work with you guys at Miles Franklin?
Absolutely. Been in business 26 years. Give us a call, 800-822-8080, or email me at ahoffman@milesfranklin.com.
Andy, I just want to leave you with this, just personally, a personal note to you. And of course, thanks to the listeners for tuning in. But I know this has really taken a lot out of you over the past decade plus. You've really given it your heart and your soul. And I just want to thank you for all that you do. Your diligence as a researcher and a reporter as we document the collapse is making a difference to so many. And I just want to thank you for that.
Oh, thank you to you. I appreciate it. And thank you for what you do with your channel.
Oh, thanks, man. And guys, thanks so much for tuning in. We really appreciate your support at sgtreport.com and the Liberty Mill, real news 24/7. And please check out Andy's blog at milesfranklin.com. Bye, guys. Have a great week.